the same time, it was the second best inflow year for ETFs. And so the way that I look at it is that even in times of volatility, more and more people around the world are looking to ETFs because they're transparent, they provide choice, they provide affordability, and they're still a really small part of the market. Less than 2% of the bond market is in ETFs, for example, and so it's a great way for people to gain access to different parts of the market.
Less than 2%, that's interesting because the Ishares bond ETFs saw dramatic net inflows last year. What about a record $123 billion?
Yes.
The return for them, because just because a herd is moving into something doesn't mean it's the smart thing to do. Can you expound upon that?
Yeah, so we had a record year last year in Ishares in our bond ETFs. And the reason why, I think, is quite simple, which is that it's what you shared at the beginning of the program, which is yields. And some of those yields that you flashed up, even for short-term treasuries or for short-term investment grade, are amazing relative to what investors had even, anything over the past 10 or 15 years. And so for people looking for income in their portfolios, the ability to be able to access it through bonds provides returns and income like it never has for 10, 15 years. And so we're seeing people rebalance into their portfolios, and they're using ETFs, and thankfully they're using Ishares ETFs to do that.
Well, the volatile market of last year, or it's a little bit of volatility today, but volatility, the VIX has been extremely low. Nothing truly worrisome that shows mass drama or anything like that. Is a volatile trade, a trade on volatility, kind of a dead trade at the moment?
Well, it's we're always looking to help clients figure out how to balance out their portfolio. And sometimes it's more bonds, sometimes it's more equity, sometimes it's more international. And so what the ETFs are often used for, in particular our bond ETFs, is buffers or stabilizers for our client's overall portfolio. And the good thing today, unlike a year ago or 2 years ago or 3 years ago, and I think you had Rick Reeder on your program a couple of weeks ago, and he made the point, which is that you don't have to take much risk to get yield like you might have 2 years ago or 3 years ago in fixed income.
Rick was saying it's a generational moment for you to be able to get a 4+% yield on a 2-year, which is really amazing. I believe the word he used was Nirvana for the bond market. But let's broaden this to the best possibilities in ETFs for what we know the Fed has said will be higher rates for longer.
Right. So I think when we look at investors' portfolios, just here in the United States, they're underweight fixed income. We published some research that even if you take the classic 60%, and so you take that, you combine it with what Rick had talked about on your show a couple weeks ago, that we're seeing more and more investors wanting to reallocate more towards fixed income. And as I said, there are ways to do it with short treasuries, there are ways to do it with short investment grade corporates, and still get 4 or 5% yields in ways that weren't possible before.
Well,
so that's where we're seeing big inflows.
For example, if you put up SHY is the short end of treasury markets, and that's the ETF.
That's right.
That enables people to play that end. Fees. Buffett always gets upset because he knows people are charging fees.
Right. Our fees, we're really quite proud within Ishares that, Ishares are about 1/10 the cost of a typical mutual fund. And even last year, when you had inflationary environments and companies all across the world raising their prices, we dropped our prices on more than 20 Ishares here in the United States. And so over the past, since 2015, we've reduced our prices by over $350 million, which saves people who are trying to invest for the first time, trying to rebalance their portfolio, or even just trying to get a fair deal, a better and cheaper way to invest.
You guys have hundreds and hundreds of, how many do you have?
We have about 400 in the United States and many hundreds more outside the United States.
What is the process to get one up and trading? Because